Okay, so now let's talk about the markets at intraday movement. As usual, we always start from the Nigerian front. The NSE NGX All Share Index it was down by about 0.44% yesterday, losing about 288.89 billion naira. Year to date has reduced all the way from 4% to about 1.92%. That's in the green, but that's all the way down from what we had about nearly 5%. And then month to date is down by about 1.23% as we speak. No thanks to the losses from MRS, as well as about 34 other losers. So we have just about 7 trading days left in the month of March. That excludes today, 7 trading days. And so far, the month of March has been in the red, like we always say, beware the eyes of March. But it's not just that the market is down. It's one opportunity for those who want to enter into the market when the price of some high-value stocks, mid-cap stocks, or low stocks of preference by some willing investors, they might want to key into that, but it's not good news for those maybe who had expected, who didn't take advantage of the high price of the market. But now let's take a look at the numbers there. The numbers, the All Share Index yesterday, we saw at intraday, it was hanging about that 105,000 points. But lo and behold, it's dropped below that level, 104,091.77 index points. That's for the markets, but it was just a tad intraday, so this number is just, let's just say, just a mirage, because at some point the market is going in between profit-taking and sell pressure, and some people are trying to come into the market while some are trying to exit, take profit on some of the high-value stocks there. So that's just it for the market on the Nigerian front. But no, before that, I think that was kind of a fast finger. Let's talk more about the South African stock market. South African stock market, yesterday we were talking about that, the 90,000 level, which it crossed into. But at some point, intraday market numbers, the market was down by 0.18%, 89,986.81. We see the impact of some sell pressure there affecting the Johannesburg Stock Exchange All Share Index. So that's the lone loser at intraday. But take a look at the other numbers on the other sides of the African continent. We see the EGX 30 as well as the Nairobi Stock Exchange in the green. For Nairobi Stock Exchange, it was there in the green for the close of Wednesday's trading session, while for the EGX 30 was also in the green. If you can have that number for our viewers to take a look. And so that's just a snapshot. There you see there 0.74% intraday. One of the biggest gainers there, 31,581.75, while the Nairobi Stock Exchange All Share Index for the close of Wednesday session, 0.68% in the green. 130, yes, it has crossed into the 130. Well, that's pretty a small number when you take a look. All the rest, all these are in the thousands, but this is just in the hundreds of units. So, but fair value is still in the green. So that's a snapshot for the markets on the African continent. Now let's talk more about Nigeria's stock market. And this time, our focus is, like I mentioned, the month of March. 2 days ago, we said, well, maybe the factors are the trade tariff by President Trump, macroeconomic variables or whatever, but this time it's really looking not too explainable, but to give us more insight into why this market is still very, very bearish and deeper into the bearish territory for the month. Let's bring in Tajuddin Olayinka, investment banker and stockbroker, to give us details about the market's movements and as well as some other factors. Thank you for joining us, Tajuddin.
Thank you very much. It's my pleasure. Good afternoon.
All right, sir. So now I would like to start first with the performance so far. We've seen 3 straight days of negative trading sessions so far this week, and then for the month it's down by about more than 1%. Now tell us, what is really the matter with the market in terms of the downturn that we've seen so far?
Okay. Some time ago, I mentioned that there was this delay rally that we experienced in 2014 December, particularly between December and January. We had a delay rally. And so that actually kept some investors away from the market, not participating. And so at the time when the rally should have reached its peak, where prices will have reached their peak and the results were not expected, the results are not also forthcoming. So all these are actually helping to shape what investor decisions will be. And so with that alone, it's a problem on its own. Then we saw what happened at the let me say 3 auctions ago, right from the last auction, like NCB auctions, where CBN in a way panicked by further, increasing the supply of government securities to be able to attract, foreign inflow. So they don't know what is actually responsible for, this so-called reversal of inflow. They don't know, but they just assume that maybe because at about the three options ago, the drop in yield, the drop in yield actually discouraged inflow, but it wasn't so. And we cannot say that even now that they have also raised the yield, that we are having improved inflow from foreign portfolio investors. So all these things are helping, actually affecting investors' decision as far as equity is concerned, because what it tells us in the market is that when are we going to be out of this high yield environment? So investors are trading cautiously, and if you look at the value, the turnover, the market turnover is also very small. That is quite unusual. So that suggests that investors are trading on a cautionary note, so that they do not burn their fingers. They don't know whether we are going to remain on the, on this high yield environment for too long, or if something that's to actually moderate now that inflation rate is also going down. Going by what we have on the rebase inflation numbers.
Okay, so Mr. Tajuddin, yes, earlier in the week we had already put out that outlook that the market will be bearish, and of course that came in line with our expectation. But this time, let's talk about the banks and insurance companies which have not released their full year 2024 results to the market. Is there any reason for the market to be worried about this, and what impact could this have in the market already downward trend?
Okay, the result is actually one of the reasons why we do not really have investors showing much interest. But we already have top quarter results which we have all analyzed. But because some of these banks also issue new shares, and these shares will qualify for dividends if they declare that dividend eventually. But because the banks have not released the results, so investors are also trying to be sure, what kind of earnings we are getting, what earnings per share we are going to get, and what dividend per share we are going to get. So what is causing the delay is the central bank. Central bank has not approved some of these results. Until the results are approved by central bank, no bank can release their results or even pay dividends. So the problem is coming from central bank, and I think it's just it's a temporary problem. I don't think anybody should panic. It's just a temporary problem. By end of March, I think we should be through with that.
Thank you so much, Mr. Tajuddin Olayinka. I think that would actually assuage the fears of some investors, both those within the market and those who want to make an entry into the market. But thank you so much for your analysis on the show.
Thank you, too. It's my pleasure.